for the weekend. All right, everyone, welcome back for another episode of Carnivore Trades. I want to go over the S&P 500 really quickly here. Yesterday and over the weekend on the Wall Street from Main Street podcast, I talked about a potential cycle date for May 3rd. I said we got a cycle window of about 3 to 4 days on either side of that date. Today we did get a downdraft in the market. Now you are holding the 20 moving average right now. It looks like they're going to close it above that. Markets have about 5 minutes left in the trading session, and overall, nice little sell-off today. However, it is important to note the volume is just about average, and for this to be the start of something bigger, we're going to need to see a lot more volume. We're going to need to see follow through tomorrow. I want to see a close below the 20 moving average, and at that point, I would call this cycle triggered. And as you can see, if we look through the intraday here, look, the VIX held this upper. So you had the gap up in the VIX, and it's really stayed in the upper, 25-30% of this move, which is nice. You see the VIX typically, when the VIX has a pop lately, it's been, up, and then it comes right back down and just, fades immediately. It's actually holding this upper range of the gains from earlier this morning, as you see the market squeezing a little bit into the close, probably just some day trade shorts covering. Dow maybe closing positive actually as we come into the final minutes here. Again, and I talked about this before, the Dow leading is not a bullish indicator. You want to see tech leading, you want to see the Russell leading. We're also lagging today, tech lagging big time today, on the back of Janet Yellen's comments that rates up. Also, you see the semiconductors lagging there too. Let's see. So yeah, holding that 20 moving average for right now. However, QQQ broke down yesterday, closed below it, and now we're confirming below the 20 moving average, getting the bounce at the 50. But this is telling me it's weak. You have much better volume here on the Qs. So if you're looking for areas to short, technology seems to be it. It looks like we're going to be having more strength in the stronger names, the bank stocks, Dow stocks, things that do better in higher yield environment. All right. So wanted to give an update on that, and also really quickly, we talked about crude yesterday, and it is official. We are now closed above this inside bar high, so this bearish inside bar is now negated, and I expect oil to make new highs. That is correct. I'm expecting oil to break out in the very near future. Targets upside short term, we're going to be looking at this high pivot at 76. You got resistance in that area, and if you can get through that, you're really going up to 80, and then you're going to have a lot of resistance in this range. So better pick. Yeah, there's some. Yeah, you got some pivots here above $80, but for near term, you might have enough juice to get through the 200, and from there, your first stop's gonna be $76, $77. But as of right now, the chart looks really bullish to me, and really all commodities just ripping higher lately. So, sorry, just scanning through. So the concern right now for the market is inflation, and is the Fed actually going to dial it back? And we have right now major labor shortages, there's supply shortages everywhere, and there is lots of price inflation across the board. There's no hiding it anymore. Wall Street's admitting it. The major media outlets are even admitting it. And this is not good for the market. It's not good for stocks. It's not good for the economy. And this is one of the many problems that I was referring to in the Wall Street from Main Street videos, and why I'm bearish this month and really for all of the rest of 2020. So that's it. Just going to wrap it up short and sweet today. Just wanted to give that update. Tomorrow we will look for further downside if we get it. I will say this cycle is triggered. If not, we may get a bounce off the 20 moving average and perhaps put in a blow off top type scenario. Anyways, that's it for today. You guys take care, and we'll see you on the charts later.